Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture. And as we head into the fourth quarter, we've got a lot to talk about when it comes to Asian markets. For example, in Singapore, we've got some moves to help revive interest in the retail stock scene. And also across Asia, China could be bouncing back. A couple of things to look out for, including its 15th five-year plan. Let's check in now with Kian Soon. He is the CEO of Astral Asset Management. Kian Soon, how are you doing today?
Good morning. I'm doing great.
All right, great to have you on. So we've got a couple of things to talk about, but before we get there, walk us through how your year has been so far. I know September, typically people say it's a slow month. How has it been for you in 2025?
I think 2025 was a good year. As you could see that the indices for global equities have set multiple records. In particular, in the United States, we could see that since Liberation Day, there's a $15 trillion rally in S&P. And September was a month that actually set multiple records. And this is actually overflowing to Asia. Asia markets have benefited with the MSCI Asia soaring around 21% year to date. And we could see the likes of KOSPI surging close to 45% and Hang Seng more than 30%.
Okay, so you focus a lot in the value side of the equation when it comes to equities, particularly in Asia, the Asian region. What has been your approach so far, and how are you going to be adjusting it in the coming months?
I guess the approach that has worked on looking for undervalued stocks has begun to reap significant rewards, especially in this year, when a lot of Asian stocks, in particular from Hong Kong and China, has begun to rally and comes to a more rewarding kind of valuations. At this stage, we are continuing to look out for value stocks in the next band, whereby there is actually a rotation out of sectors that are slightly overvalued, and looking into sectors that are still really undervalued in these aspects as we're in the early part of a rally cycle.
Okay, so you talk about sectors that are potentially going to be in focus. So what would that be, particularly as you look at what's playing out in China, where there is going to be a 15th five-year plan in focus? What will that transpire or translate to when it comes to markets?
So next month, the CPCC will have their annual meeting whereby they will look into the China 15 Five-Year Plan for 2026 to 2030. There will be a lot of focus on innovation as well as growth, especially in the IT sectors, with the emphasis on artificial intelligence as we all anticipated. There's a bit of catch-up, as you could see, that's being played out by China relative to United States, especially in the artificial intelligence space. So we could hear a lot of innovations as well as announcements on how the government will, through via its measures and guidelines, will support the artificial intelligence as well as the biomedical industries.
Okay, lots to watch out for when it comes to China. Are we looking out for any more stimulus measures in the near term?
I think the market has been anticipating for economic stimulus measures for China, but I would say in the next 3 to 6 months, I don't think there will be significant stimulus. All eyes on the outcome of the tariff negotiation with the United States, which is expected to be discussed end of the year, or when President Trump actually makes a trip to meet up with President Xi.
All right, lots to watch out for when it comes to China, and also a lot to watch out for when it comes to Singapore, which, looking at where we are right now for the STI, we've been hitting new highs in recent weeks. Walk us through what's been driving that and also what's in store for the Singapore market.
In Singapore context, is due to a comprehensive set of measures that are launched to strengthen Singapore equity markets in 2025. And that's why you could see that the market has actually rallied around 15 to 17% this year, with a lot of new programs that is going to be announced. For instance, the Equity Markets Development Program, which MAS announced that they will invest selected fund managers with capabilities to implement investment mandates and strong focus on Singapore stocks. MAS also announced that the new Singapore Family Office applying under the GIP program must invest a minimum of 50 million in equities listed on approved Singapore exchanges. We also see that the announcement of last few days by SGX on the launch of 2 new indices that will include 50 Singapore stocks in terms of market cap as well as liquidity. I think all these measures and announcements and programs basically helps to boost the confidence for Singapore market liquidity.
Yeah, so there is a lot of work being done behind the scenes as well. And you talk about how we have now new indices to draw more interest into the markets, not just from the retail side, but also from the institutional side. As a fund manager, Kian Soon, how much interest does that translate for you to look at Singapore more closely?
I think definitely a lot of fund managers are beginning to look closely onto the Singapore markets as the liquidity of the mid and small cap stocks have improved, and that provides an avenue for fund managers like Astral, which focus a lot on mid and small caps, to take a closer look at the Singapore stock markets.
Okay, are there any names that come to mind or any sectors that this could help put a focus on?
I guess with the announcements of a lot of programs, we are actually seeing a lot of placements as well as IPOs. In particular, in the real estate investment trust space, that was announced over the last few months. I guess REITs has always been a sector that has been of interest to a lot of local investors, given that the investors like kind of sort of solid income over the years. And therefore, we are seeing also a revival in the REIT sector, in particular because of interest rates decline that is anticipated, and that could be a boost for the REIT sector over the mid to long term.
All right, talk about what's of value right now or what's of value in recent times. Banks have been hitting new highs. Where does it sit in your portfolio?
I guess in terms of banks, there's always the discussions about the rich valuations, given that they forms a very stable part of Singapore FTI. And that's why, when the indices are performing very well, the three banks definitely would benefit from the liquidity as well as the interest from regional fund managers. Given that the interest rate is going to be cut over time, it always creates another stress for the performance of banks because the net interest income margins, etc., will start to decline. But so far, I think all the banks in Singapore has been delivering very good financial results, and I would think they would continue to attract a class of investors who are looking for liquidity, as well as a stable dividend yield of around 4 to 5%.
All right. We've been in conversation with Kian Soon. He is the CEO of Astral Asset Management. Kian Soon, thanks for your time and insights.
It was my pleasure.
All right, great chatting with you. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.